Black Wall Street. Do it right, build wealth, live life, economic empowerment, real tips, insight on the new Black Wall Street. It's on the new Black Wall Street. Here's your host. The new Black.
Oh, good morning. My bad, man. Good morning to you, billionaires. Thanks so much for joining us here this morning on the Money and Power Show. I'm your host, ERGJ, your certified global financial educator, CEO of ERGJ Enterprises, the Black Bazaar, and international best-selling author of the book, The Black Billionaires Club. I'll say good morning to you guys as we get into a little bit more of this crypto education. We'll learn today we'll look into this protocol called MIR, which is you'll find out why it's called MIR in just a second. While you guys are connecting, go ahead and let me know that you are here. Say hello, good morning to you. Let us know where you're connecting from, what city, what state, what country you might be connecting from, as we're broadcasting across the World Wide Web into Facebook and also YouTube. Well, before we get started, guys, I want to let you guys know that there are a couple of links in the description that you will find. We have a class coming up this Saturday to teach you about the crypto wallets. How to secure your crypto, different wallets that you can use for different things. And so check out that link in the description. And also there is a link to Coinbase if you haven't started your crypto journey yet. Now you might be looking and saying, well, why start that crypto journey? Well, it could be that you believe in the future of crypto and not just the temporary influxes of high and low. It is a very volatile market, very risky. But with risk comes also potential rewards as well. So we'll dive into that here today on the Money and Power Show. See who is here, joined us as well. Good morning to you, Tisha. How are you? Good morning to you. Atlanta's in the house. Miss Sincere is in the building as well. Thanks so much for joining us here this morning. So we'll start by taking a look and see what has been going on in the crypto space. We see obviously some price fluctuations to the downside. A lot of fear in the market. We'll start by looking at this fear and greed index. We see here that, it's extreme fear in this market right now. Typically when there's extreme fear, there's a lot of selling going on, driving prices down. We see last week, we started to, go to the upswing. Money was coming into the market. We got all the way up to about a 38 on this index. And then with the news, with China, with different sentiment in the market, now we're starting to see, I think Mark Cuban had something happen to him. China, regulation, taxes, things like that. There's been some fear that's coming into the market, causing people to sell off. And then obviously we had also 2 holidays. Typically people take profits during holidays. I mentioned that to you guys last week. We will probably see some downside fluctuation over Juneteenth and Father's Day. Same thing we saw over Memorial Day. So could represent some opportunities to buy. My mentor teaches us to be greedy when others are fearful. And so the reason why we do this show is to learn about the projects, and then those are projects that we believe have long-term value. We then could decide to invest in those projects with the token that's created for those projects, and then look for the long-term growth for this, what I believe to be a once in a lifetime, once in a generation wealth building opportunity. Right now we're looking at the cryptocoinmarketcap.com. Look at what's been going on. We have over 10,500 tokens that's been created in this crypto space. All of them are not valuable. All of them are not worth a lot of stuff. We do have project tokens, we have meme tokens, we have social tokens. So again, this is a little bit more than just looking at a chart, I believe, which is a great space to read charts, but then also to understand the project that's behind it as well. Bitcoin, which is we have a global market cap of $1.26 trillion right now, flowing in this market. Again, a big sell-off. We were up to about 1.79, I believe, a week ago. So we're down over the past day, down 8%, 8.5% as far as the trading of money that's taking place in the entire cryptocurrency space. Of that space, you have Bitcoin, which is the most dominant token. representing 46.8, almost 47% of the market is in Bitcoin now. So what's happening here, guys, is that for those that are still in the market, they're moving out of the money is moving out of the alternative tokens, which is anything but Bitcoin, and moving into the Bitcoin, which is the more stabilized, more respected, I guess you can call obviously the most popular token. And then Ethereum, which is the second biggest token in the crypto space, at 17.3%. So out of this $1.26 trillion, you have 63% of it in 64% of it between those two tokens. So the most popular tokens. So money is kind of flowing away from the alternative tokens into more established, more popular crypto, even as the money may be flowing out as well. And so I wanted to do, see if I can, excuse me. So we'll take a look here at Bitcoin real quick and take a look at the chart here. I wanted you guys to notice something that I was taking a look at because again, we'll hear a lot of what's, a lot of everyone has a price prediction. Everyone, for whether it be from 10,000 to 100,000 or whatever the case may be, of all these predictions of where Bitcoin will be year end and all that good stuff. Let's see if this chart will load up for us so we can take a look here. I don't need this screen anymore, so I'll bring this down. So let's see if this is going to move at any point in time. I'll go ahead and load up for us. A lot of thinking. What's going on, brother Sabayo? How are you out of Nigeria? Thanks so much for joining this morning. I think it's afternoon for you. Okay, so this doesn't look like it's trying to load up for us. So let me take this down. I'll try to take some other stuff off the screen and maybe it'll give us some. I really want to look at this chart. So let me refresh here and see if we get a little help here. It shouldn't be that difficult. Okay, here we go. It's trying. All right. So, okay, good. And I might be able to do this. You know what? Let me go to this other screen because this thing is just really, really, really taking its time. So I'm gonna come over here. Give me just a second. Let me come over here. I should be able to look at it here. So we'll take a look here at some news that's taking place in the cryptocurrency space. What's been going on lately. Normally there's, okay, here we go. I can look at it here. So I want to take a look at the 7-day chart and the monthly chart, see if it popped up. Here we have, a decline over the past 7 days in the cryptocurrencies in this Bitcoin space. We're down roughly hovering around $30,000. I think I can see it better or quicker on this other screen. So let's see if we can do that. Yeah. So we have the 7-day chart here for Bitcoin, obviously showing some decline over the past 7 days. But if we look at different time frames, we see here over the past 24 hours between yesterday and today, we have, basically sideways consolidation coming down as low as 31,250 over the past 24 hours or the past 7 days. Again, that same time frame down here at the end between January 21st and 22nd. But let's go over a month and we'll see here since May 22nd, we have basically been over the past 30 days, we've basically been going up and down sideways. And so, we have real support down here at about 31.5, I would say, 30,000 as well. And then let's take a look at a year as well. So it really, Bitcoin in a sense hasn't really moved much over the past, ever since basically over the past month. It hasn't moved much. So now if we take a look at other tokens or whatever the case may be, that's fine. We're down 6% over the past month. We're down 21% over the past 7 days. But if you've been holding Bitcoin for a while, you're only down 6% over the past month. And then if you've been holding it for a year, you're still up 231%. So you're still doing well if you've been holding it for over 365 days. And so the up and down swings that comes along with with this very volatile market, which makes trading very popular if you become a good crypto trader, so to speak. And so I just wanted you guys to see that, because I've been in Bitcoin for at least 4 years, 3 or 4 years or whatever. So so these temporary downswings to me don't really affect me as much. But of course, if you're a person that just recently bought or got into Bitcoin, it's going to affect you a little bit more because you're feeling the pressure right now. But again, looking at it from a long-term perspective, you see the growth that has taken place here just over the past year, and we can continue to move forward from there. So we'll take a look here at some news in the cryptocurrency space. So, basically, again, still talking about crypto going down, crypto down. There's obviously some regulation going on with the Bybit. It's a Canadian crypto exchange. They're talking about a lot of the ICOs that took place since 2009. There've been a lot of penalties over the past 12 years in this Bitcoin space, ICO space as well. So that's all all kind of like negative news, right? Talking about basically some of these projects have ripped people off. There's some regulation taking place for some of these exchanges, and here's the deal. I'm actually a fan of some of this because I don't want to see anybody lose any money, and I want to see some legit exchanges out there, which is why I continue to recommend Coinbase as a legit exchange that has a lot to lose by people losing money through their platform. They are a publicly traded company right now, so you got to be very careful. This is why we're having a class on Saturday to teach about the wallets and things like that. You got to be very careful in the space. And if you don't know what you're doing, you could lose a lot of money. Jay-Z's Rockefeller Records is in the news. They have a lawsuit. So there was an NFT of Jay-Z's Reasonable Doubt that Rockefeller Records is saying that Dame Dash, this is probably valuable to some of you guys, that Dame and Dash launched an NFT, I believe. Let's see here. Say Dame Dash was planning to sell an NFT tied to Jay-Z's debut album Reasonable Doubt on an online marketplace called Superfarm. The album was released on Rockefeller in 1996. So I'm not quite sure if this is alleged. Allegedly, obviously, if you guys know about Rockefeller, that's where Jay-Z, Dame Dash, and some other people, kind of got their start. It was founded by Kareem. It was founded by Dame Dash, Jay-Z, and Kareem Burke. So it looks like Dame Dash went forth to create an NFT, which is basically a digital music or digital album on the blockchain on the blockchain. And maybe he didn't have permission to do that. So this is alleged. So there's some more beef going on between Jay-Z and Dame Dash. And this is over the NFT for Reasonable Doubt, which quite possibly is going to bring in a lot of money. So that's in the NFT world for cryptocurrency. So we'll see, see what happens there. It's all alleged, but probably happened. Who knows? DCG is currently buying up Ethereum on the Grayscale. So Grayscale is in the stock market. That the popular meme token Dogecoin has dropped significantly. I think it's down to 2 cents, I believe, per coin. So there's been, for a while, a lot of people were, Dogecoin. So it did move up, but it's lost a lot of its steam with the downfall or the decline in the market, so to speak. There was on the Binance Smart Chain, a DeFi project that was hacked, losing as much as 500,000. So this is more news that's coming out that's driving this fear that we see in the market, driving people to get out of some. And I'd imagine if I heard this and I was in some DeFi project that was on the Binance Smart Chain protocol, Binance Smart Chain blockchain, I would probably be getting out of those projects. And so that's probably what happened here. This news came out yesterday. But then here's some good news. You have the Dodgers owner who is betting $100 million on a Facebook alternative, a decentralized social media project called Liberty. All right, so Liberty is looking to create a decentralized social media platform, which is basically where you would be able to have this social media experience without giving up all of your information. I don't know how that will work, but they're looking to create that. So there is some what we call it, some competition in a lot of different spaces between what's centralized and then what's coming down the pike to be decentralized. Okay, so that is some of the news that's taking place that we have here today in the crypto space. As we can see, quite a bit of negative news driving fear into the market, driving sales to take place. But again, your long-term belief in cryptocurrency and Bitcoin and cryptocurrency is going to basically determine what you do with your funds, with your investment dollars here in cryptocurrency. So what I wanted to do, what we're going to do today, MIR. I thought it was called MIR. Okay. We're going to take a look at a MIR protocol, MIR, I believe. MIR protocol. That's what we're going to take a look at here today. Good morning to you, Miss Yvette. How are you? What's going on, Miss Vivian? How are you? Thanks so much for joining. So we'll take a look at the MIR protocol here today. That is a crypto a coin that's in the cryptocurrency space. We'll find out about what this protocol is looking to do and accomplish, and it'll make sense why it's called MIR in just a second. Okay, why it's called MIR. So the MIR protocol is what we're going to be looking into today. Now, this MIR protocol, actually, although the market is down, it's up 8% over the past 24 hours. This is basically a $5 token right now. It ranks 223 in the cryptocurrency space. That would be that's the amount of money basically that's flowing. It's the 223rd biggest largest cryptocurrency in the world. It has $372 million, so I would consider this to be kind of a mid-cap crypto. Up 8.99%. So there's been some money flowing into this cryptocurrency over the past 24 hours. It looks like. I would imagine this is a 24-hour time frame. There's going to be a total. Right now we have total supply of 370 million tokens in circulation. There is no maximum supply, so these tokens will continue to be created as needed, and we'll find out why. That'll make sense in just a second. MIR is also what I consider to be a synthetic token. It's created to mirror real world assets or real world events or real world activity. So I thought this was a pretty cool concept. And in the synthetic space, there is some competition here. We'll take a look. Maybe this will pop up for us. I don't know if the chart will pop up for us, but we see a very similar chart over the past year. But here we see basically, sideways consolidation over the past 7 days. Getting in, under $5 for this token. And let's find out about it. Yeah, it's been roughly hovering around this $5 space over the past month. It did jump up to about $6.50 during that run up for crypto as a whole, then came right back down. So about $5 seems to be where it is, and probably until it's accepted or adopted more. Now, this is all about mirrored assets. So MIR is the governance token for the MIR protocol, a synthetic asset protocol built by Terraform Labs on the Terra blockchain. So this is a different blockchain. Terra is the blockchain it's built on. MIR protocol is decentralized from day one with on-chain treasury and code changes governed by holders of the MIR token. TFL has no intention of keeping or selling MIR token. There are no admin keys or special access privileges granted. The intent is to be a completely decentralized, community-driven project. So it's all about, if the adoption from the community comes, then there'll be more and more that can be done here on the MIR protocol. So mirrored assets are blockchain tokens. Here's exactly what it is, and we'll find some other similarities in other projects, but they behave like mirror versions of real-world assets. So again, mirror versions of real-world assets by reflecting the exchange prices on chain. So we have the blockchain, which is the technology, and then we have these real-world assets like gold and silver and things like that, and they are traded in the stock market based upon price of that particular asset. Well, here we'll see a mirror of that. So a mirrored asset, or M gold or M silver, on the blockchain. So I thought this is such a neat concept, because then it gives traders an opportunity to basically trade decentralized on the blockchain for the very same assets that they might trade for in the Wall Street, right? So this is coming in to disrupt or to compete with what's taking place on Wall Street. They give traders the price exposure to real assets while enabling fractional ownership, open access, and censorship resistance as any other cryptocurrency. Unlike traditional tokens, which serve to represent a real underlying asset, M assets are purely synthetic and only capture the price movement of the corresponding asset. So this is all about trading on price, which people that are traders could become very astute and may decide to move into this space and have this as another part of what they do, to trade mirror assets. And it's all trading price. Forex is trading price. It's all about what the future price will be versus what the current price is, and that difference, trading on those differences and that flow and the changing of price action for any particular asset. So here's some of the advantages of mirrored assets. Global accessibility. So right now, there may be someone in a different country who can't trade on the United States Stock Exchange, or I'm here in the United States, I can't trade on the Tokyo Stock Exchange. Now, there may be some companies in Tokyo or Japan that I might be interested in. There may be some companies in Canada that I might be interested in investing in. There may be companies in Africa that I might have interest in, but I don't have access to that because I'm only eligible to trade as a United States citizen on the United States stock exchanges. So it gives global accessibility. In most markets outside of Europe and North America, access to foreign equities and forex markets is highly limited. Crypto allows global accessibility without entry barriers. I really like that. It gives everyone an opportunity to participate in the global exchanges, in the global market. Fractional orders, right? In traditional finance, to execute a fractional order, multiple fractional orders are bundled together to execute a unitary transaction. The process of gathering all the orders into one requires additional waiting time. By utilizing the blockchain, order volume is simply represented as a number on the blockchain, so there's no need for the intermediary bundling process. So I could buy a piece of something, which we're able to do, but that process, they're saying, typically there's a little bit more behind the scenes than we may recognize as a front-end user. Nearly instantaneous order execution. So this is another thing about blockchain that super, super fast. Oftentimes, due to lack of liquidity, price, time, priority order book algorithm, orders can take up to a day to fully execute. Given the fact that MIR relies on liquidity provided by each individual asset pool, orders can be executed as fast as block time on the network, which is 1 to 6 seconds. So if you've ever, maybe you have a 401k or IRA, you may place an order for something or change stuff out. It takes 24 to 48 hours for that order to execute. this would be something that execute in a swift amount of time. So we'll have to go directly to the website here. Not much more information about this from CoinMarketCap, but we'll go over and take a look here at the, again, MIR protocol here in the cryptocurrency space. So let's see if we can find this. So let's do this. So the website is www.MIR Finance. And we'll take a look here at MIR protocol here. See what you guys are talking about here in the chat. Good morning to you. Good, thank you. The words are too small. Oh, I'm sorry. Good morning, Ms. Hall. How are you? Thanks so much for joining. So here's MIR, assets reflected on the blockchain. So I love the name and all that good stuff. To learn more, read the docs or the white paper, join the community in the Telegram. So someone said it's too small. Let's see if I can make it bigger. I think we should have been good over here as far as size is concerned. Maybe I didn't know. Yeah, it should have been fine. All right, so we're not going to go to the white paper, but let's see how this works. Again, MIR protocol allows the creation of fungible assets. So we hear the term NFT, which is non-fungible, which is just basically one authentic asset. Fungible means there's many of them. Synthetics that track the price of real-world assets. MIR synthetics are intended to be used as key building blocks in smart contracts and to bring the world's assets to the blockchain. So bringing the world's assets to the blockchain. This is just another sneak peek into crypto that's basically trying to take over the world. Okay. The new world order, which is crypto in a sense. So to mint a mirrored asset. So M asset means a minted asset or mirrored asset, and user must lock up 100% of the total of the current asset value in Terra stablecoins or M assets as collateral. And the value of the asset, if the value of the asset rises above the collateralization threshold, the collateral is liquidated to guarantee solvency of the system. So they have a little system here, 150% of the asset value to be basically as collateral to mint a mirror asset. Now I wonder, they got this thing to mint it, mint it. So you got to lock up some money or lock up some stable coins. So there's a Terra stable coin on the Terra blockchain, or you have or you acquire M assets that you have acquired. So you may have other M assets in your portfolio that you use to then mint a mirrored a mirror asset. Okay. To target the price of the M asset, the system reads in underlying asset prices via decentralized price oracle. Prices are updated every 30 seconds. When the price of the M asset drifts significantly from the primary market, traders are incentivized to purchase, sell the asset to mint, burn to claim the collateral. So traders in this decentralized Wall Street, if they see that the real world price is significantly different from if the M asset price is significantly different from the real world price. So I guess I could see if there's an asset that really moves fast, that has a lot of price fluctuation. We saw, things like GameStop and AMC have these real vast, quick price adjustments in a short amount of time. I guess that could happen. But then there are some incentives to the traders within the network to bring that thing back into that sounds interesting. When the price of the M asset drifts significantly from the primary market, traders are incentivized to purchase it, to sell the asset to mint, or burn to claim the collateral. All right, so to burn an M asset, the issuer must bring the equal amount of M assets issued when opening the CDP. The collateral is then returned to the issuer. So basically, this basically, it sounds like minting and burning is kind of like the buying and selling. So when I buy it, I'm minting it. When I'm selling it, I'm burning it. And I guess it sounds like they're using two different words, new terminology for a very different thing. So in the M asset world, I'm minting to acquire, and then when I'm selling or giving back, I am burning it to sell it. Okay. So I have an M asset that I would mint to then acquire it, add it to my portfolio. And then when I want to sell it, I am burning it and putting it back into the marketplace in a sense for that. So here we have where we could trade. We have, and I thought this was interesting. I'm gonna try to go to this MIR web app, but you have a MIR wallet, which is looks probably be an app on your phone. Terra Swap, which is on the Terra blockchain, where I could then trade M assets via Terra Swap. We have the on the Ethereum blockchain, we can trade as well, and we can trade through this MIR web app, which we're going to take a look at here in just a second. So it's powered by Terra, available on the interchain. So MIR smart contracts. So we heard of smart contracts through Ethereum. Well, Terra have their own smart contracts as well, specifically for this project, are built on Terra and Cosmos Wasm. What? Cosmos Wasm, and leverages Terra USD as the collateral asset. So Terra USD is the stable coin to represent the dollar, the USD. So we see stable coins being like USDC, Tether. So they have their own stable coin, which would be the representation of the dollar on their platform through the blockchain. So I would exchange my dollars for Terra dollars to then have Terra USD available to then trade for M assets or mirrored assets. Okay, I'm making sense. All right, let me see if we can pull up this web app and see if anything shows. So trade, mint, and govern on this web app. Let's see if we have any luck here pulling this up. So we can take a look at now this would be like our virtual, or this space here is like our virtual Wall Street or protocol. I'm sorry, Wall Street or portfolio, right? So we have, so this shows here the M assets. There are $430 million dollars in this Terra world, right? We have 1.96 billion UST. That would be Terra UST locked. Okay, what does this mean? Total value of collateral, liquidity, and staked MIR. We have 189%. Remember, it had to be 150%. We have 189% collateral ratio, so they can basically cover. So they got enough money to cover any trades that take place. We have a community pool balance. Total number of MIR. Oh, this might be a little small. Make this a little bit bigger. Okay, let's see here. What's this Terra dashboard where you can trade, mint, pool, stake, and govern? And then I can connect a wallet. Again, this is why we're having a wallet class this weekend on Saturday. The link is in the description. You got to learn about these different wallets. If this is something that may interest you, this is the centralized Wall Street here. So the MIR price, as we just saw, to get the MIR tokens, $4.80, right? $4.80 for a MIR token. We have these transactions, 30,000 transactions taking place over the past 24 hours. So that will be a buy or sell or burn, a mint or burn that's taking place in this space already. So there are people over here that are basically doing your decentralized trading. Value of trading fee paid in the last 24 hours, $197,000. Now this right here I don't like right now. So this will be some type of fee, maybe a gas fee. I don't know if this is a transaction fee. Value of trading fee paid in the last 24 hours. You do pay a fee for trading. I wonder what that looks like in this decentralized world. So, but it basically $192,000 have been this protocol has made $192,000 in the past 24 hours, which you're going to pay to trade. But I wonder what those fees look like. Okay, this is your market cap. This is the total value of all minted assets, 430 million in this decentralized Wall Street. Total value of collateral, 1.96 billion. So that covers they have way more liquidity in here than they do have than the total market cap, which is good. And that would represent 189%. So this over this, I'd imagine. Let me get my calculator out. I imagine that's how they came up with the collateral ratio. Total collateral value to the total minted asset value. I think that's how they got 189. So we have way more. Let me get my calculator out here. 1.96 billion. $100,000 million billion divided by 430. Something like that. I think that's 100,000 million. That's a 4.5. I don't know that. Oh, percentage wise, I think that's how that works. Then you have your community pool balance, total number of tokens or MIR tokens currently in the community pool. All right. So then we have, here's your liquidity here. It's up 0.3%. Total value M assets and UST and liquidity pools. So this is what's used to help those trades execute in a in 1 to 6 seconds, right? So they have more than enough money, more than enough UST or Terra UST to cover trades in their platform, in the pools from the community and stuff like that. And here's your volume over the past, I guess this is the past month. Total value, no, this is volume. So they had a lot of trading that took place. I wonder, so they're Thursday, Friday. Okay, so here you have, so here's the interesting thing as well. Well, Wall Street is closed over the weekend. Over here, it looks like there's still volume that's taking place 7 days a week. So there's some access to this market 7 days a week. So it looks like some things are taking place. And here's some of your top trading assets, right? So you have your MIR token, which we discussed. The underlying name is MIR. That's 32.35 million in volume over the past 24 hours. Then you have your Ether. So now we're trading. These are trading. Trading cryptocurrency, MIR, Ether, Bitcoin. Now we have your mirrored companies: Tesla, GameStop, Twitter. These are 4, 5, and 6 as far as volume is concerned. Trading in this virtual or digital decentralized Wall Street. ProShares, VIX. This is a futures ETF. Alibaba, Apple, Netflix, Coinbase, Alphabet, which is Google, Amazon. You see here you have M Netflix, M Coin, M Google. So all these are mirrored assets. And basically they're saying, hey, cryptocurrency is an asset. We're mirroring that. We have these wonderful, great companies that we're mirroring. We have these ETFs. We have these trust funds. We have AMCs down here, Airbnb, Facebook. This is interesting, Spot Index. And it's probably, those are the top 24. I don't know if there's more on this platform or those are just, that's how many there are. So this is, here's kind of looking at, when we first came into this thing today, we were looking at the coin market cap and the whole cryptocurrency market. Well, we're looking at a mirror market, right? For decentralized mirrored assets, which are traded here on the blockchain, which I think is just bonkers. I mean, wow. That's what's going on here. So let's see if we can, I wanted to get rid of that. So if I don't have anything, I don't have a page. So, I mean, I had to connect a wallet, either Terra Station extension, which I could create on my web browser or mobile. That's interesting. And then I can see my wallet. We can trade when you connect the wallet. Here's how you trade your UST. And then I can trade it for, I have this drop down. And if I wanted to acquire Apple or Airbnb or AMC, I'm thinking right now, man, if this thing really, this is all about adoption, right? So if I was able to trade anonymously, this sounds like a real game changer because one, they're only asking for a wallet. They're not asking for an ID. They're not asking for my name. They're not asking for my social, any of that stuff. So it's not regulated, which is for some people, that's taking a huge, that's a risk in itself. But I don't know. I mean, for me, I'm not a big regulation guy. I don't think that really protects me much. I mean, but you do have the SEC that's over Wall Street in a sense. This is interesting. I mean, there are some of us who are really rebels to the system that we have created, but I'm able to basically acquire, build a portfolio, trade this decentralized with just through my wallet address that I may create here. MIR is up 6.59%. Let's see here. Let's see if I click on what I want to click. Let's click on Facebook. What happens if I click on that? Okay, so that shows it's up 0.3% over the past month. That can't be the same. Okay, nothing's changing. Okay, so that didn't change. So, okay, hold on. Let me see here. So they do have a little mirrored Facebook, and they talk about what Facebook is. But the problem is when I clicked on week and year, the graph changed, but this little number here didn't change. Okay, let me go to Tesla. I know you guys like, let's go to AMC. What's AMC? What's AMC saying? So AMC, okay, it's still not. So I guess this will be, it's down 9% over the past 24 hours. I have a little thing here, and that would be me acquiring the mirrored asset for AMC. This is just amazing. This is amazing. I can do a limit order, market order, or limit order. Very similar. That's buying and selling. I could sell here. I could basically sell it, get out of the asset, turn it back into my Tether USD, which will represent the dollar. And then I guess I'd imagine eventually I will be able to get out of those dollars and convert those dollars to whatever I wanted to convert that UST to. That's trading. What is minting? Minting here, I don't really understand. Okay, so maybe I was wrong. So this is buying and selling the trade. Minting is something I need to learn more about. Minting it would be kind of the creation. It looks like it's the creation of the asset. And then, okay, so if I mint an asset, I'm creating an asset and I'm making it available. I'm creating a mirrored asset and making it available in the exchange for someone to then be able to trade. It looks like, so I'm adding liquidity to the exchange or to the protocol. I'm adding the liquidity to the exchange. I'm adding the asset into the exchange. That's what it sounds like I'm doing. But in order for me to do that, I have to have a 200%, 150 to 200%. Basically, 200% is safe. I'm gonna have to learn more about this minting stuff, but it looks like I'm creating the asset. So if I'm exchange my UST to then create, let's just see here, create this M Apple. Which I would need 100. So I can add liquidity. I wonder what the perks are to adding liquidity to minting. If I'm gonna have to give up collateral, which is my money, to mint basically create an M asset, add it to the pool. What's my benefit? What's the benefit to me for what do I gain to win? What do I gain to earn? Let's see this. So if someone were to buy that minted asset, do I get that money? Does that money? That's a little confusing. Anyway, so I'm gonna have to look up mint. What am I doing here? What's the benefit to me as a you? How do I benefit from minting this asset or this M asset? Pool here is, it looks like I guess I'm providing. Okay, this is where I'm providing this asset. So that's not minting. I'm providing an asset over here. That's if I already have, I've acquired this asset. Now I want to pool it over here. This is interesting stuff. All right, so if I already have an asset, and I want to add it to the pool, I can bring it over, or I can withdraw it. That'll be the MIR token, the BTC, probably M assets and all that stuff as well. So let's just say I went and acquired MIR probably on Coinbase or something like that as a token. I could then bring it over here and provide it. Looks like I could provide it to the pool for liquidity purposes, but I'm still not getting the mint process. Staking, very interesting to see what the staking process is. Woo! Wait a second. Earn MIR tokens by staking your LP. Liquidity, what are LP tokens? LP tokens can be staked to earn MIR as rewards. LP tokens are obtained by providing asset liquidity. Okay, here's the benefit. So if I provide asset liquidity, I will earn LP tokens. And then I could stake those LP tokens to earn MIR as rewards. So this is a whole system that's going back and forth here. So the MIR tokens that I acquire, I could then the LP tokens I acquire, I could then stake. And look at these staking rewards. APR would be the amount of stake LP tokens quantity of LP tokens staked for the corresponding asset pool, liquidity asset pool. So if I stake MIR to the Tether liquidity pool, that's an 81.6% APR. 125% APY if compounded daily. So that's MIR to US. So if I want to stake LP for MIR, okay. Wow. This is okay. So if I wanted to stake my UST or my Tether USD LP, if I brought liquidity to the marketplace and I wanted to stake those liquidity to LP token liquidity pool tokens for GameStop, right? 85.9%, which is 134% APY. Man, this is a whole new blockchain game that's going on here. Basically providing liquidity. Liquidity just means that for those that are trading, to be able to get in and out of these to be able to buy and sell, to get in and out, liquidity is provided by the community, and then those who provide liquidity are rewarded. Now imagine that these APYs come from those fees that are accrued for trading, so that probably helps pay for the APY that's being provided for, that's being as a reward for providing liquidity to the market. This is very interesting because basically it's saying that the community is community driven, and then those that want to trade anonymously obviously pay fees to trade. I don't know how much those fees are, but it looks like those fees that accrue help to pay the liquidity providers who happen to be the community for bringing for staking their tokens. 80.69% for the VYX. You want to do AMC is you're looking at 115%. Now we don't have this option to stake and earn quote unquote dividends in the at this rate in regular Wall Street. In regular Wall Street, we're acquiring AMC to our portfolio, and then if AMC pays some type of reward or some type of dividend, we get that. But if they don't, we don't. Here is saying, hey, you could become a participant in the network and stake tokens, provide liquidity into our pools, and and be compensated. So then I'm like, okay, well, exchanging this LP token once it's accrued back to MIR, and then back to UST. Wow. So I can see how you can decide. I could decide how I wanted to do this, right? I might start off by trading, which is working on accumulation, right? And then as I accumulate, I might say, hey, I've accumulated, this amount of UST. Let me now provide some, let me now, provide some liquidity into the market, which I think would be the pool part. So then I could provide MIR into the market, and then I would that will give me some type of LP tokens, and then I can take those LP tokens, and I could then say, okay, now I'm gonna take those LP tokens and I'm going to stake them to then earn more MIR in return at a rate of, these rates change, but 125% APY is absolute. That's me doubling my money or doubling my contribution in, doubling my contribution in less than in a year. These are insane rates. These are insane rates. Anyway, insane rates. And then you have your governance, which is as you're a part of this space, you are able to vote. And so here's some of the voting that's taking place here. The Nokia ADR, I guess they're looking to add. They're trying to see if people want to add Nokia, a MIR asset Nokia to the pool. MIR V2 migration. So community votes on this stuff. If it gets approved, they move forward. It looks like the uranium mining ETF got rejected, so that didn't get added. ARC Innovation ETF, the MIR asset for that, looks like it got passed. It'll be being added soon. So basically the community votes on which assets to add to the Wall Street, to the decentralized Wall Street. That's pretty cool. And I could be a part of that by being a holder of the MIR token. And then over here it says MIR, I could stake MIR here as well. So if I owned MIR, I could then also stake MIR. Wow. So this is interesting. So let's just say I went and acquired MIR. Then it's saying I had a stake reward for being a MIR holder of 51.77%. Analyze MIR staking return based on 15 days average of MIR distribution staking ratio. If I were to stake the MIR that I owned over here in the Terra blockchain, which could be taking it from where I bought it or acquired it, to then staking it over here and letting it sit there, 51.77%. Now think about this for a second. Now I know that we see the market is down right now. The market is down right now. But what if, I didn't really care about whether the market was up or down, because some of the assets that I controlled or some of the tokens that I held are sitting over here earning 51.77% while the market goes up or goes down. And then, at some point in time when I decide to unstake, I don't know if there's some locking period here. If I were to unstake, these my tokens, I could then come out, 3 months, 6 months, a year, and maybe the market has recovered and the market is going up. So while the market is down, I'm earning more and more of the asset or the tokens, so to speak. And then as the market fluctuates, whether it recovers, whether it goes up, whatever the case may be, I am now putting myself in position to then, take advantage of appreciation on that particular token. This is all in the DeFi world. It gets, like you said, Mr. Troop, you start moving down a rabbit hole here. But yeah, I think this is I wanted to present this. I thought it was a very, very cool concept. And I think we'll stay in this vein tomorrow when we take a look at our next coin. So yeah, this is some information about this MIR protocol. I think it's very interesting, as it relates to quite possibly being adopted, especially for those that want to basically leave the matrix, so to speak. And so today is our presentation on crypto education for the MIR protocol. Basically, looks like it's looking to become, again, the decentralized version of Wall Street. The difference being that the community determines which assets will be traded, which will be available to be traded upon. So you don't have, 10,000 stocks to choose from. You can only choose from what the community has voted is worthy to be traded upon in this exchange. So we don't see all the cryptocurrencies. We don't see all of the stocks. I didn't see a M gold or M silver or I didn't see an M oil. So some stuff that may be coming down the pike, but as they roll out, I guess you could say the polls for the people, and the people vote and determine whether they want it or they don't. And it keeps going from there. So at any rate, that's our time here today, guys, for our crypto education here on the Money and Power Show. Again, we do have a class 103 coming on Saturday. If you want to learn about these wallets, it's talking about connecting the wallet and you don't really get it, we'll be teaching that this Saturday. There's a link in the description for that class, so you can learn about these different wallets and how to create them, how to keep up with them. If you want to participate in some of these other spaces in this cryptocurrency world, whether that be acquiring tokens, whether that be NFTs, whether that be DeFi. There's some nuances to the game, and you can learn some of those nuances here this Saturday. If you've learned anything today, man, go put some pineapples in the chat just to say, man, you've come across some new information that you didn't have before as we continue to dive down the rabbit hole of cryptocurrency. I'm your host, man, ERGJ, Certified Global Financial Educator. I want to say thanks so much for tuning in today for our crypto education, the MIR protocol. What do you guys think? Do you believe that this has some relevance in our future, or is this just just some smoke that's taking place, some smoke that's being blown up our nose? Your belief will determine what you do with your money. Again, do your research, look further into it if you have an interest here. I'm just presenting what is already out here and being and happening, and we kind of go from there. I want you guys to remember this, man, that it takes a village. It starts with us. Let's build as we climb together. We all we got, beautiful people. Matter of fact, we really need. And thank God that's more than enough. Until next episode, you know what time it is. Mr. DJ, hit the music.
The new Black Wall Street. Thanks you for joining the show. We gave a lot of great tips, but it's time to go. Take the knowledge we shared, hope you use it and grow. We will see you all there at the next episode of The New Black Wall Street. The New Black Wall Street.